Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It's December 17th. This will be our chart lesson for today. And here's a quick look at our daily chart. You can see it looks like a big down day. Really, for the most part, this was a sideways kind of a mixed trading day. Uh, Almost a trading range. Most of this movement all came in the overnight, and then we just worked sideways for the rest of the day. But you can see the lows of this range are holding. So if that continues to hold, I guess we'll trade back up to the upper side tomorrow, maybe. So we'll see. I will say that we've made a lower high here each time we've rallied, and but at the same time, it looks like we've made a higher low each time we've rallied. So um, it's more dramatic to the on the upside, getting lower highs than it is getting higher highs. I would just really call this pretty much standard across there. So we'll see what tomorrow brings. Um, Before we flip over to our 2000 tick chart, we'll just go through this again. Tomorrow will be my last day to work this year. I'm going to take off. I'm going to work tomorrow. We'll have a regular day tomorrow, and then I'm going to take off through the end of the year. And I'm not sure what day I'm coming back yet. I may come back on Thursday, December or January 2nd. I believe that's on a Thursday. But since that falls on a Thursday, it's going to make a really short week, and I may just wait till Monday. I believe it'll be January 6th before I come back to work. So I probably won't know that until probably that week. So I won't worry too much about that at this point, but just trying to give you a heads up on when I'll be back in the office. Not sure if it'll be January 2nd or if it'll be um, January 6th. But tomorrow will be the last work day. That's going to be it for me this year, and I'm going to take a vacation for the rest of the year. Um, so anyway, let's get back to the chart lesson. Um, you can see it looks like a down day, but when you see the 2000 tick chart, which we'll flip over there now, you'll see that it was sideways day. We closed off the lows towards the middle of kind of the range of what we had today. But let's flip over to the 2000 tick chart and we'll take a look and go through the trades, and we'll wrap today up, and that'll give us one more work day, and then that'll be it till the end of the year. Okay, here we go. Here's our 2000 tick chart, and you can see really from just after the open, it was just sideways. We opened at the yellow line, and we pretty much closed near the yellow line. We did push a little lower. We tried a few times to go higher. There was a gap. This would have been the target, this red line, to fill the gap from yesterday. That's the close from yesterday, but we couldn't do it. The market just couldn't muster up enough strength to do it. So again, we did close off our lows, but again, I just call this kind of a sideways day. Most of the selling came during the overnight hours. And then from that point on, it was just we just kind of mixed choppy trading. One thing I did change, originally I had this trend line drawn a little flatter here, but I believe the uptrend didn't really start till here, and so I kind of changed that. And you see it does fit a little better. You get the close outside, move to a new high, then you're working down, close outside, new low. And then we did try to shoot up one more time. We get a close outside, new high there, and then it was off to the races downward. And I believe this is two different trend channels. We had one down with a close outside and a new low, then we worked sideways, and you started another little spiking channel here. Or at least I drew it as a spiking channel. Actually, it looks like we got a close outside and a few swings down, and it looks like we just were kind of overdone there and then rallied. I drew this other channel. It does fit. The only thing I would say with it is we don't get a break and a new low on it, but doesn't mean it's not valid. I mean, if you drew it, it helps you. It keeps you in the trades longer. So, um, depending on how you saw that, you might have seen it a little different, and it just may be two swings down, honestly. But there it is. That's how I saw it. Let's zoom in here. Not a lot of trades, especially early this morning. You had to be patient, and just kind of a slow. And it's going to be like this through the holidays. Just be prepared. I don't know any other way to say it, but it's just going to probably get slower and slower. It doesn't mean we couldn't have a crazy day or something crazy couldn't happen. But if it's just a typical holiday and nothing out of the ordinary happens, some crazy economic or some event, world event that sets the markets off, it should be just start to slow down and continue to go slow and choppy through the end of the year. So that'd be my expectations. But anyway, let's. We did have a news item this morning. There were a couple of them hot. They were retail sales at 7:30, so I blocked that out. Didn't really have much effect. Um, we did get a break of the trend channel and a move to a new low with a nice little setup there. And if you caught that one, that may be all you need for the day, depending on what your targets are. But it's clearly two legs back, and there's that's not a second entry by the counts. That's just a first entry, and then this is a second entry. This actually broke higher and turned down. I'd wait for this to close. Don't trade the engulfing bar. And then a lot of you probably should just skip it anyway because it is an engulfing bar. But I like going short there. It is a second entry short. Break below that. It's a nice move down. And if you just wait till the first bar that closes bullish and you get a break above, there's an easy 6.5 points there. So, I mean, you could have easily gotten 8 points out of that, almost 9 points. So if you just would have exited when it starts rallying there, but that's hard to do because it looked like it was rallying here and it didn't. But if you just wait till a break above the first bullish bar, it's easy 6.5 points there. And so if you get a runner, and you probably would get a runner on that. Just depends on how you played it. Most likely you should get a runner on that. And again, there's a new low there. It's lower than that one, so that's a first entry, and then it broke higher, failed, and turned down. So it's a second entry all in one bar. But again, don't trade that on the engulfing bar. Wait till it to close, make sure it's bearish, and if you get a break below that, it's probably headed lower. And you would expect a retest of the lows here. We didn't make it on this first attempt, but that was during the news. But we clearly make it here, and it looks like we're going to try to rally out of there, but prices don't seem to be able to do it. So uh, there's a break higher here. This is one of those that maybe you know, if you really want to be aggressive, maybe you enter there. You're better off to wait on the higher low and you don't get one. You're just chopping sideways here. Now, I will say that it looks like a triple test here. So if it would have broke above that bar, maybe you go long there, but it doesn't. It gives you an inside bar, and then it breaks above, and there's just no setup there. And it does take off. There's another second entry here, but that looks too congested, and I'd like to see a couple of tests of this to prove we're going higher because as you see, it looks like we're going to go higher, and we don't. You don't get any proof here, and this is just more side. We actually move a measured move, and it looks like we're going to turn down there, and it pushes one more time up and then turns down. But you don't get any setups here. So there's no setup here. Drops down, gets back in the range again, but there's no setup here. It looks like you might get along here, but that just looks so congested. I'd sit tight. And it would have worked if you took it, but I just think everything's pointing down here. So this turns on down and makes a new low. I don't see anything there. It looks like, again, maybe we're going to rally out here, and then we just start working sideways. This is not rejection, so you finally get a failed break lower, but with a failed break lower there, even if we're going to go lower, it's probably going to rocket out of there. So maybe you take that. Again, you're always better off to wait on the higher low. And you get a higher low here, but that looks too congested. Not a very good signal bar. It closes below the support resistance, so it's acting more as resistance there. Don't go long there. As you see, you would have got stopped out there, only to see it go where you were hoping it would go. But if you're patient and wait a few minutes, it comes back and it gives you a bounce right off the low with a nice signal bar. That's where you'd rather go long. And that's a pretty nice quick move. If you held through all this sideways stuff, you probably would have got a runner here too. Most people probably wouldn't hold through that, but if you did, you got a nice runner here and would probably had a nice profit on the runner. So I drew my trend line. Again, originally I drew it a little flatter, but I changed it later because it just didn't look right. So I don't think you'd be wrong if you read it that way. It still kind of works out the same, but just to show you how I originally had it, I had it more like this. This was a little lower here, like so, off of these bounces here. And you can see it does fit there. And it does fit the midline. Only problem is you never get a retest of the high. So in retrospect, I think this was the channel with the break and new high, and then we turned down. So it doesn't change much except that you don't get the retest of the high. And that happens sometimes anyway. So, but I don't see any entries here, chance to enter until this is all sideways. So that's a first leg down. So you get a first entry and then a second entry long right there. And you do get your break and a new leg, and that's a higher low. So I like going long because you're expecting a retest here. And if you drew it the other way, it's right off the key entry point. And then you get a failure here. Now I'd marked this when I drew the other way. I don't know that I take this trade because when you usually if you're taking a failed second entry short that's a continuation pattern, it has to be off the key entry point, the trend line, and that's not happening here. So if you didn't read it the other way, I probably wouldn't take this trade. Although there's still reasons to consider. There's probably a trap there, so maybe you take that. I don't know. But you got to wait for this bar to close. It does close above. It's very bullish, so maybe you still take that. You're expecting a retest of the high, so it's probably going to act like a trap, even if it's not a failed second entry type trap. It's a trap. So it runs up here. It does make a new high. It barely makes it and then turns down. And I don't see any chance to get short there. And then we're chopping along again. This is almost a repeat pattern of this down here. And you get that little failed break lower. So I marked it green, and then you get a higher low here that you can trade on this one, and it actually takes off on that one. But you get another channel, and so this had played out. Now you're headed up. You get a channel up. You do get a close outside and a new high, and a bearish bar there. Again, usually you need to wait on the lower high, but maybe you take that. It's a second entry short, first entry, second entry. But you don't get a lower high, and it just kind of, you get a break and new low here, and then you're chopping sideways again. But you do get a triple test across here, a chance to you're just straight. It's just a range trade there. That drops lower, and in this case it keeps going. You got lucky on this one that keeps going. So I doubt you get a runner on this, but if you did, you could have got a nice ride out of that one. And these are all just first entries all the way down. I don't see anything that I would, unless you're recognizing this is a strong trend, you might enter there, and you might enter there, and both of them would have worked. Then you get the close outside, move to a new low, and then you get a second entry short right off the other possible trend line and right off the EMA. So there's a good chance it's going to make another leg down. So I like entering there too. That's just a first entry. And then we just chop sideways into the 230 hour. And that was it. So again, there's somewhat of a range across here. Grab the wrong one. I didn't really draw it this way or trade it this way, but it's here. That would probably be your lows. And I'd probably call that my highs. And so you can see it there. It's a little more clear. It's definitely sideways. So I don't, drawing it that way doesn't change anything in my opinion. So still works out the same. So that's how I saw it today. Mostly all sideways, choppy. No real consistent lows or highs, because you see you got lows here, and then highs in here, and then lows down here, and then highs up here, and then now you got lows across here, and it's just not consistent enough to really trade as a range anyway, although it is mostly sideways type price action. But anyway, that's how I saw it today. This kind of trading can be difficult. You just have to, you either have to trade the trend channels or trade the ranges. And I would wait on triple test on most of those things just to be certain. And yeah, there's not much else you can say about today. It's just it looks like we're going. It looks like holiday trading we're going into, and we did just roll the new contracts, and so there's a lot of squaring up going on, but already because of rolling contracts, and then because it's the end of the year, people are might be cashing out for um, what they can before the end of the year based on their taxes, or they might be squaring up. They might need Christmas bonuses, to buy their, for Christmas to. Uh, People spend a lot of money at Christmas time. So there's a lot of crazy different things that affect the market and make it a little different during this last few weeks of the year. So just be aware of that. Um, but anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. Tomorrow will be it's going to be a short week. Tomorrow will be our last day to work this year. And so no more mid-morning charts, no more chart lessons for the rest of this year until after January. And again, I don't know if that'll be January 2nd or January 6th, but we'll figure it out between now and then. And but I'll see you tomorrow, and we'll wrap it up tomorrow, and we'll call it a year. That will wrap up 2024. It's been an interesting year. Um, Volatility has definitely slowed. It's nothing like what we had. I mean, we'd get this much price action in an hour sometimes during COVID and during the high volatility that came after COVID. But the market is kind of slowing down again, and it makes sense. We've really rallied to new heights. We've been making new contract highs quite often for the last few weeks, and so I think we're at a price point where people aren't just pouring money in, but people don't want to take money out because they don't know if the rally's over, and we're in the transition between um, the Democrats running things and now Republicans coming back, and so that changes things. So it's going to be an interesting year in 2025. It's already just a lot of craziness out there. Um, they've got the stuff going on in the Middle East. You got the Russian and Ukraine stuff going on, and the U.S. is kind of, while we're not officially involved in any of it, behind the scenes we are. We're feeding them money, we're feeding them supplies, we're feeding them weapons, ammunition, and so we're really involved in a war, whether people will say we're at war or not. So there's just a lot going on, and we're sitting on a fire keg. So something could happen at any point, or nothing could happen. But we're just the possibilities are there. So just always be aware of that. Trade wisely. Always have your safety stops in place. If people just put their safety stops and use them the way we teach you, below the swing, one tick above or below your swing high or swing low, depending on which way you're entering. As long as you always do that, you're never going to get wiped out. You might take a loss, and even if something super crazy happened, you might take a point. I would say the worst would probably be a point or two of slippage, and that's probably pushing it. You might, a tick or two would probably be big. And as long as you trade like that, you're never going to get wiped out. So just trade smartly. Never trade without a safety stop, especially day trade. Um, Now, if you carried something into the close, I mean, you can see the market closed right here. It closed. Let's find a good one. It closed here one day and opened here the next. And so that big of a move could wipe out a small retail trader. So keep that in mind. And the previous day we closed here and opened way up here. But that's why we don't have to have the big margins as day traders, because that can't happen to you. The worst that can happen is the market just turns and the bottom falls out. But there's going to be trading on. You can see there's not any gaps and there's trading, so you're easily going to get out. So just keep that in mind. That's the reason that we prefer day trading. That's what turned me from a um, I'm not. That's what turned me away from swing trading and carrying overnight trades in um, in futures, because you can get wiped out on You can go to bed being up thousands of dollars and wake up and your account's wiped out. It happens quite often. So that's what led me into day trading. I discovered that if you're going to day trade, you're better off to do it in the ES and just become an expert at the ES. And that's the, why watch 50 stocks and try to find a stock moving every day and then not really know that stock and something crazy could happen. If you're going to be a day trader, the way to do it is to do it in uh, futures and do it in the ES. You get the limited margins, the lower margins. You don't have to worry about slippage in the ES very much. Some of these other thin markets, even oil, you can get big slippage. But you don't. It's rare that you get any slippage in the ES during regular trading hours. Not to say that it doesn't happen. Every now and then you get a tick, but it's never more than a tick or so. Um, but if you trade these other markets, you can get big slippage, and that makes it tough to day trade and scalp because you get the slippage. And so in this market, we don't have much slippage, if any, especially if you're trading during regular trading hours. And that's why we only trade during regular trading hours. I'll tell you every time, don't trade this stuff over here. Yeah, there's some good moves, but you might you have to sit up all night. I mean, if you're up all night anyway, maybe you can try to trade it, but you might sit there for hours and watch it do nothing. I mean, just as an example, let's just look at one of these right here. This started at 226, and we really didn't get any movement until 4 o'clock. So an hour and a half, you had to sit there and watch it do that, and then it, let's say that's 4, and then it's another hour and a half before it actually starts moving big to the downside. And you're going to want to be trading down here because we're in a downtrend, and so you got to wait from 2 to 6 o'clock, and then it's almost time for regular trading. So it's just not worth it. Don't waste your time. That's my advice to people. Trade the regular hours. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. We'll wrap up our week, we'll wrap up our month, and we'll wrap up our year all in one bit tomorrow. So hope you had a good trading day. I'll see you tomorrow. I'm out for now. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.